All right.
Thanks for coming, guys. Another good turnout.
Yes. Had so much fun last week.
It was good, wasn't it? I really enjoyed it.
All right. Can everyone try again in the chat, please? Say hello. Let us know where you're from. No. Okay, still not working. All right, we've got one more minute. And then we're going to jump into it. There we go. The chat is working. Hello, hello. Awesome to see you. I see we've got tuning in from Gold Coast, New South Wales, South Australia, Canberra, Gold Coast, Central West, New South Wales. Look at that. Hello, hello, Melbourne. The recording went out for those that registered already. Check your emails. Central Coast, look at you all. So happy to have you here. Beautiful. Love it. Okay, we're going to pretty much get started in about 30 seconds. Feel free to chat, let us know your thoughts as we go along. If you have specific questions that you would like us to answer, if you could please use the Q&A and we'll either respond to the questions as we go, or we will have the chat responses depending on where we're up to. If we don't get to you, we'll be leaving it to the end of the session where we'll have a dedicated Q&A sort of spot. Lovely. Love how we're all spread out. Anyway, I'll let you go, Justin. Sorry, got excited.
No, it's great. Yeah, thanks everyone for joining. All right, let's jump into it. So part two. So what we talked about last time, we talked about how the world has shifted for small businesses into this era of efficiency, right? And there's two forces, a positive force and a negative force. The negative force, of course, is inflation, and the positive force is technology and AI. Then we talked about the process, the people, and the technology, right? And this is really the partnership between Profit First and Thriday, and how we come together to try and help you guys succeed, whatever that means to you. So success means different things to everybody, but at the end of the day, every small business needs cash flow to succeed, and we help with those parts. Next, we talked about how the technology works a little bit, and how Thriday is all-encompassing with everything that you need to manage your cash flow. And then we went through all of these things, and as I go through these, Laura, maybe just talk to them a little bit for anyone who didn't, who wasn't there on part one. But we talked about common financial mistakes that hijack business efficiency. First one was trying to earn your way out of a hole. Oh, I can't hear you, Laura.
Can you hear me now?
I can hear you now.
Okay. We spoke to the mindset of whenever you're feeling stressed about what's happening in your business, we go into the, I need to earn more sales, more revenue, all of that, rather than looking at other areas in your business.
Yeah. And then not knowing. What do people not know?
A lot, actually, and it's very, very normal. It's not knowing what's coming in, not knowing what money is yours, not knowing how much, you need to be paying the ATO ahead of time or the tax office. There's a lot that we don't know, and being aware of these different areas and learning will help in that aspect.
Yeah, you may not know, but you definitely can know, and it's not hard to know. Not chasing invoices, big one. Chase your invoices, people. No one will be angry at you for chasing money. Not quoting fast enough.
Yes, and that was something that you spoke to, Justin, where, if you are unable to quote quickly, then don't quote at all, because it actually creates more of a detriment than not quoting and being upfront and saying, I can't at the moment, can add you to a wait list or whatever that may be. Yeah,
because if you don't quote quickly, you're probably not going to get the job anyway. So you're wasting your time, you're wasting everybody's time. Quote quickly. Absolutely. Or don't quote at all. Negotiating terms.
Yeah, so this is a big one, and we spoke about the fact that we tend to not think about the availability of negotiating our terms, whether that is changing a payment date, doing it over a payment plan that may not be the norm, and having that conversation around what is possible and then sticking to what you negotiate.
Yeah, getting paid faster is always a win for cash flow.
Yes.
A lack of focus that actually gets you to your goal. Shiny object.
And this is a yes. Oh, over here. It sums that one up.
I'm guilty. I am guilty. Not understanding how your business is actually serving you rather than how you're serving your business.
Yeah, so this is a mantra that I basically live by because I've learned the hard way, and that is your business set up to serve you as the business owner, meaning you're earning enough from it, it is helping you reach your goals, it is something that you really enjoy showing up to, or is it you serving your business, that you've effectively created a job for yourself and that you're busy doing all of the things?
Yeah, your business should be improving your life, not the other way around.
Yes.
Mixing personal and business finances, massive no, very, very easy to do, but you can avoid it, and you
Absolutely. Yes, I agree.
should. Thinking all the money in the account is yours.
Yes. And look, we've all been there, haven't we? It is a matter of when you start to get that revenue going and you're like, oh, great, this is great. And you look at your bank account and go, I can spend this on the things that I need to spend. And then that tax bill comes in, or that unexpected annual bill that you'd forgotten about, and realizing that the money that was sitting in your bank account wasn't actually all yours. And so having that clarity can really help that.
100%. And the last one, having all your eggs in one basket. I shared a story about how I basically had a failed business back in the day because we spent all of our money on a whole bunch of containers of barbecues that needed to get there in summer, didn't get there till winter, cash flow dried up, shut it down. So don't be me.
I love that, Justin. And the other side of that is like client concentration. So if you have one really big client that brings in 80% of your revenue, well, diversification can really help with that.
Yeah, 100%. We'll talk a little bit more about that later, which is cool. So part 2, today we're going to get into preparing your business for financial stability. This is the cool stuff. So how to prepare for success and the system for securing your financial stability. Here we go.
This slide.
Great
success.
Yeah, that's right. So first is first, why are you in business? Why is this so important, Laura?
Yeah, so this is I know that a lot of you have probably heard of the Simon Sinek start with why and all of that, but it really is a very important question to answer. And I know that when I got into business, it was from I need to get out of a situation and earn some money, which a lot of us are in, but skipping over the why am I in business? Is it to provide for my family? Is it to have an impact in the world? Is it to have a lifestyle business so that you gain more freedom, whether that's in time or money? Being really clear on that will then help you determine what you say yes and no to, and where you focus your energy in your business, rather than just saying yes to everything and being bogged down or not profitable, which can happen really, really often.
Yeah. I learned actually a little while back that 70% of businesses don't want to grow at all costs. Everyone talks about growth, and that's actually my job, right? Growth. As a startup, we want to grow, but 70% of small businesses don't want to grow. They don't want more employees. They don't want more clients. They want enough to keep the lights on and enough to be able to go camping on the weekend or whatever, not have to worry about money, but they don't want growth at all costs. And that's fine. If that's your why, then it's important to understand that and important to build your business around that concept. What do you want to get out of it?
Yes. And this is the tangible, as well as the feelings and all of the things that come with it. What do you, as the business owner, not just what does your business need to earn, but what do you want to get out of it? Is it a certain amount of wage? Is it having enough profit to be able to offer free products and services to those in need? Is it to be able to pay off, a certain debt that you have personally that, long-term will create wealth creation? What do you want to get out of being in business? Not just how can the business grow or how can it be profitable, but what can it do for you? What can you get out of it? We do not spend enough time answering this question for ourselves.
What does success look like? Drink in the hand, toes in the sand, or growth? As I said, 70% of people probably drink in the hand. But then, there's a chunk of people that obviously want growth at all costs. And I see this with a bunch of mates of mine who have different small businesses. The percentages work out pretty well. About 10% of them want to just grow. They live for their business, but the rest of them, they just want the time.
That's it. And it's not always monetary related. Money needs to come into it to be able to allow you to do the things that you want. But success for me, for example, is how I feel when I turn up to my business and how I live my day, and whether or not I'm feeling burnt out or I'm loving life. That is also another sort of perspective to consider when you're answering the question, what does success look like for you?
100%. What's your time frame? This is important, right? Because you probably can't do everything in a week, but you need to be realistic about how long it might take you, and also having an understanding or an idea of that time frame enables you to work backwards, right? And actually create a plan.
Definitely. The other thing to consider here is, as humans, we overestimate the amount of stuff we can get done in the short term and underestimate what we can achieve in the long term. And so keeping that in mind when you're answering that question, what is your time frame? That we tend to think, like, how many of you, and I'd love to know in the comments, and I am totally guilty of this, my to-do list, I think I can achieve like 30 things in 4 hours. 30 big things, and then I'm like, I can't get through my to-do list. And we do this with our business as well. We're like, well, I'm going to get to this revenue, or I'm going to have this team member in there. So I can see that. Yeah, we're like, totally never. I knew I wouldn't be alone in that. And so being really clear that maybe your short-term goals are not as realistic, and your long-term goals you could put more into. So just a thought there.
100%. Like we use a system called objectives and key results within Thriday, and we do this each quarter, but we look at what we achieved in the previous quarter and what our sort of conversion metrics were and our funnel metrics were to come up with a realistic goal for the next quarter, right? And then once we've come up with that goal, we work backwards. What are all of the things that we need to do to be able to achieve that goal? Are they feasible? Do we have enough resource to do it? Do we have enough money to do it? So it's always, what's the goal? What's the time frame? Work backwards with what you can actually achieve in that time.
Absolutely. And I did touch on this. It's the what is realistic, but realistic in terms of time frame. But how many clients do you currently have? Is that a sustainable business model for you, or is it too many where you're burning out? Is it, what are your actual current products and services, and at the minimum amount that you're receiving in revenue, can you live on that? Is this viable for your business? And getting real about your current cash flow situation, as well as your business profitability. I'm sure you've got things to say about all of this, Justin.
Yeah, look, 100%. Sometimes if you charge $10 more per hour, what does that do to the conversion rate of quotes that get signed off and come through the door versus how many hours you actually have to spend working? And sometimes that equation actually works out really well in your favor. You end up with a little bit more money and a couple less clients, and all of a sudden you're making the same amount of money for less time invested, right? So it's important just to weigh up your options and sort of come up with a few different scenarios of what it might look like, because what is in your head currently might not be the only way. So scenarios are important.
That's it. And bringing the whole realistic thing back into perspective too, with the time frame, is that if you've got 100 different services and products that you think will take off in the 3-month period, maybe that isn't as realistic as the same over a longer period of time.
It's true. Yeah, I've got a story here actually. I used to sell gyms online, and we had one particular gym. It was this multi-station home gym, and we used to sell heaps of them, right? And it made 80% of our revenue. And we thought, okay, we'll do a forecast. If we get 10 different kinds of gyms and they all sell at the same amount at the same time, like, we'll make all of this money. Of course, that didn't work, right? We bought 10 different kinds of gyms, and the one gym that always sold well was still 80% of our revenue, and half of the other gyms we couldn't even move. We couldn't even get rid of them, right? So I guess the lesson learned there is double down on what works, experiment with a few things on the side to see if they work. But again, it comes back to all your eggs in one basket. Don't spread yourself too thin across things that aren't proven, right?
Yes.
Yeah. What do you need to efficiently achieve the goals you've identified?
And so that's a big thing. So going back through the questions that we've just gone through. So why are you in business? What is it? What are you going to get out of it? What are your goals that you're trying to achieve? And what's your current situation? Is it realistic? And then it's like, well, what is the answer to this? How is the most efficient way to be able to achieve the goals? And this applies whether you are in startup or whether you're an established business, because we can very much have these goals that feel really far away and we have to do lots of hard work to achieve them, when in actual fact, there may be a more efficient way to do so.
100%. Yeah. In startup land, like, there must be 100 different marketing channels I could potentially go and use, right, to promote our product. But we don't have the time nor the funds to be able to do that in every single channel. So we've got to be very selective as to what channel we choose to market in and how we choose to market in those channels to be as efficient as we possibly can. That's just one example, right? You could use that across the board for everything. The number of products that you have, the number of customers that you have, the type of clients that you choose, the number of locations. It's endless, right?
Absolutely.
Business structure.
Yes. So now we're going to get into sort of the 4 key points that you should really have nailed as part of your business stability, growth, and profitability. And the first one being the business structure. And this is something that is often an afterthought for a lot of people. And, starting as a sole trader is a very good way to get started, but knowing and having the discussions and the support around you to know when is the time to change structure, or if your business model changes, is that current structure really important? And some of the structures that we have are sole traders, partnerships, if you want to do it with someone else. There is obviously the company option, there are trusts, and it can get a lot more complex from that. But let's just keep it simple in terms of the sole trader is great if you're getting started and everything's in your name. But what will happen when you have a lot of revenue and profitability? It may not be the best structure. You'd end up paying a lot more tax or not being able to claim as many things as you possibly could in a different structure. And so really having that conversation, like, what's the end game? Not just how are you starting?
Yeah. There's costs involved as well. Of course, they become kind of irrelevant depending on how much revenue you're making, but certainly worth talking to the right people. And I'm talking legal and accounting for understanding the correct business structure for where you're at and where you plan on being.
That's it. And who's involved as well.
Yeah, who's involved, exactly. There might be a couple of you and you think partnership just sounds like the right thing to do, but really a company is probably the way to go.
That's it.
Legals and agreements.
So this is as fun as money a lot of the time. When we start to say legals and agreements, people go, oh, here we go. So stick with us. Again, the legals and agreements, I'd love for you to consider it from a different frame. So most of the time we see it as, a litigious thing, having that in place because if something bad was to happen, then you've got that risk management, which is very true. But how are you explaining how your business works to the people that you're working with or the products that you currently have in place? And what I mean by that is, how can you set expectations, timeframes, outcomes, all of those things for your clients if you don't have a service or a client agreement in place that is yours, not just a template that talks to, not random, but I guess general things. How would you like your clients to understand how you work? And really crafting it to support that communication is really, really important.
Yeah, I think some of this stuff is about perception as well. If you don't have
Mhm.
some of these things in place, people just aren't going to want to do business with you
Mhm.
because it's just not professional. Similar, like if you're not registered for GST and you send an invoice and there's no GST on it, and that person, like that business, then knows you're a sole trader and that you probably don't have the backup of a team to be able to get things done if you're sick or for whatever reason, and it's there. It could be an opportunity cost of them actually working with you versus working with someone who has a bit more backing behind them. So perception, legals and agreements are a lot about perception as well. And it doesn't have to be expensive, right?
No.
There's great businesses out there like Sprint Law, for example, where they have templates of all of this stuff for every single industry and very, very cost effective to be able to go and get everything you need for an early stage business in terms of legals and agreements. So yeah. The next thing, profitable products and services. Yeah.
That's my wheelhouse.
Yeah, 100%.
I spend a lot of time in this space. And the reason why we've chosen this as one of the keys to really spending the time in is that we tend to know what top line revenue we want. So how much we'd like to see incoming into our business, but we don't necessarily look at each line item or what the efficiency of what you're selling is there, or the profitability and the margins. And it doesn't have to be complicated and scary. It can be very, very simple. And Justin, I know you've put this operating ratio formula. And let's talk to that so that for those that want to get into more of the nitty gritty, they can understand that. And then we can talk about how Profit First can also work in a really similar way.
100%. So a big business, this is how they would measure basically their efficiency, right? Operating ratio formula. So it's the cost of goods sold plus the operating expenses divided by your total revenue. And the lower that ratio is, the lower that number is, the more efficient your business is performing. And then shows you on the left how to do that calculation if you want to. But it doesn't need to be complicated like this. It's because of these complications and accounting formulas and theories that Profit First exists, right? Because people don't want it to be like this. They want it to be simple. So,
yeah,
as an alternative to this, talk us through the Profit First method.
Sure. So one of the biggest things that I find, and the Profit First professionals in Australia and New Zealand find when they're working with their clients, is that pricing is a problem, meaning that yes, it's bringing in revenue, but the clarity around whether or not it's profitable and what's actually left over for your business to run on can be very, very minimal. And what I mean by that is that you could have a multi-million-dollar business that after all of the materials and subs and direct costs and contractors and that sort of thing, what you're left as real revenue, which is part of the Profit First methodology, could only be $200,000. And so from that $200,000, you need to be able to pay your tax, GST if it's applicable, yourself as an owner, as well as having cash profit aside, which most businesses don't have, and then the operating expenses. And so business owners get really worried when they notice that they don't have the money sitting there for these things. And it's because of this efficiency, of this profitability, of not looking into what you're actually spending from your top line revenue. And so spending the time there to really look at, of all the money coming in, putting a profit percentage aside, what's left over after you've spent your materials and subs? Is it a really small amount, or is it close to that top line revenue? And that will tell you immediately how well your business is running without it having to be really, really complicated.
Yeah. Yep. 100%.
We do have a question here, Justin. What's considered a low ratio?
Yeah, it's a good question. That is kind of how long is a piece of string, right? So when I was researching this, I had a look at Walmart, for example, in the US. Their ratio was at 95.5%, which is obviously high, but that 4.5% that they have left over is a huge amount of money. So that's why it comes back to simple numbers and sort of this bank account based method of accounting, where if you're seeing that volume of money in your operating expense account increasing over time, it means you're efficiently running your business, because it means you're putting profit aside. It means you're paying yourself how much you should be paying yourself. And it means all of your other costs are accounted for, right? So that's why simplifying it makes a lot of sense to a lot of people. But maybe for you, a 50% ratio is good. Maybe it's a 30% ratio. It really depends on how much revenue you're bringing in, how much and how much you want to pay yourself at the end of the day.
That's it. And that's really, just to add to that, as well, as it's really important to not get hung up on whether it's low or high, but more what is the dollar figure that percentage equates to for yourself. And then can you do all of the things that you want to do, such as have profit, pay yourself, pay taxes, and keep your business running without any issues. So it's like, again, looking at simple ways of understanding how profitable your products and services are. And if you haven't spent time on pricing, then looking at things like what is the cost to you, plus any payment gateway charges, then adding the profit margin on top of it. What does that look like? And is your pricing at all close to that at the moment?
Yeah.
Even if you start there, it'll make a difference. Yeah,
definitely. And you know, it probably wouldn't hurt to do this, to use this formula on a couple of your projects or a couple of your actual products to see how they differ with their operating ratio, right? For each product or service. Financial management.
Yes. And so the fourth key, and really I would say a very, very crucial one, is the financial management. And this is where Profit First and Thriday together make this really, really efficient and seamless. And we'll go further into what that looks like. But did you want to say anything at this point in time, Justin?
Yeah, that's why we're here at the end of the day. We're a financial management platform. Profit First is a financial management system. And together those things create a super efficient way to manage the cash flow within your business, which we all know the importance of.
Yes. And we've spoken about this numerous times already, but we wanted to really drive this point home. What is the most efficient path to your success when it comes to your finances? So if you have the business structure, the legals and agreements, and profitable products and services together with a financial management system that is easy for you to use to follow and make great decisions, well, then you can't be anywhere but on the most efficient path to your success.
Yeah, definitely.
And as we said, it is all about cash flow. And so for those of you that are not aware of what the Profit First methodology is, and I'd love to know in the comments, how many of you know about Profit First? Have you read the book? What do you know? Let me know in the comments. That'd be really great. But for those of you that are unaware of this cash flow methodology, it is based on the book by Mike Michalowicz, where any money that comes in, you're effectively using the envelope system. And what does that mean? It means that each bank account has a purpose. And we've spoken about operating expenses. We've spoken about a profit account where cash accumulates, owner's pay account, tax and GST. All of those are really, really important. And so what this is it's a matter of all of your money coming in, and then there's a percentage allocated to each of these bank accounts. And if you haven't read the book, I highly recommend that you do. We will be going further into the nitty-gritty of that in our next webinar series, but for now, this is more a higher overview. But the point is that you need to know what your money is doing at any point in time and be able to make really good decisions, so that if you have an opportunity for growth, and that's something that you want to pursue based on answering all of these questions, and look at that bank account and go, yes, I have the funds to do that. I can do that. Or no, not yet. Yeah,
exactly. And, you know, Thriday makes implementing that super easy. So this is just an example of the cash flow module that we show you. And this is all of the cash flow within your whole business. So you can kind of see where you're on track at a high level. But then you can spin up a new bank account, up to 9 bank accounts within Thriday, just with a couple of clicks. And that way you can split your money up across all of those systems. And we're actually very close to automating the setup of the Profit First accounts within Thriday, which is super exciting. And I can't wait to show you, Laura. It's actually in the dev platform at the moment.
We've got some comments here. So we've got a couple of people that don't know much about Profit First. So if you would like to, you can read the book, or you can head on over to our website. We'll have the links without the recording. Some people have listened to Mike on several podcasts and have the book and are in the process of implementing. Some people know about it but haven't read the book, and others are loving it. Life and game changer. Awesome. And we've got a question here from someone that's, if I already use an accounting system, for example, Xero, how does Thriday fit in? Does it completely replace Xero?
Good question. You can replace Xero with Thriday, or you can actually continue to use Xero hand in hand with the Thriday bank accounts if you want to do it that way. So Thriday, the way Thriday works is, as long as all of your income comes into Thriday, your expenses go out of Thriday with the Visa debit card you get with your Thriday accounts, and then you're scanning and saving your receipts to Thriday. Because the bank accounts are built in, the fidelity of the data that we have is super high, which means we're able to automatically categorize and assign a chart of accounts to those transactions, which effectively means your bookkeeping is automated and your accounting is automated as well. Of course, you still maintain full control over the classifications and the categorization and the chart of accounts for each of those transactions. So you can change it if you need to. But the idea is that you don't have to. The whole idea is that you shouldn't have to spend your Sunday evenings reconciling receipts, right? It doesn't have to be like that, because it's just rules, which we can build in the background.
Beautiful. And if you have specific questions that you'd like us to answer, if we could use the Q&A, that way it doesn't get lost in the chat. And if I don't answer the question immediately, we will get to it at the end. So thank you for that question, and thanks for the answer, Justin. And I love this question, and I don't think that it's spoken about enough. And why does Profit First exist? But for those of you that haven't read the book, the whole reason that Mike even wanted to have this system in place for every single business to eradicate entrepreneurial poverty is because he experienced it himself. He ended up in a business that earned multi-million dollars, sold businesses, thought he had all of the money in the world until he didn't, because he didn't control his cash flow in the way that was simple for him to manage. He had compliance done and accounting done and all of that, but the day-to-day and, whether to invest in other businesses or whether to buy that expensive car that he wanted to buy, he just did it because he was making decisions from one bank account that looked like it had a surplus of money and ended up completely bankrupt. And his, little daughter offering her piggy bank up to him at the point that he really didn't have any funds and had to let his whole family down. And so it really is a mission for us that there is a system that is simple, that can stop this from happening and can allow you and your human behavior of checking your bank accounts to make decisions to have it all set up in one place. And really with Thriday, it makes it so seamless because you've got all of the bank accounts set up and you can easily have percentages that are allocated to each account. And so that's really why Profit First exists today.
Yeah. And I love that story. It's it's heart-wrenching. And I've actually been there myself, so I knew exactly how he felt. And yeah, it's worth a read just for the story behind it, right?
Absolutely. But in a nutshell, and I think this is really important, normally, and what your profit and loss shows is that your sales less your expenses is what profit you have left over. It really is an afterthought, meaning that what we tend to do is get in that mindset. And this was in part one, we spoke about this, where it's all about sales, earn more money to pay the expenses, and hopefully I have some profit left over. And a lot of the time businesses tend to have profit on paper and not in the bank. And that's where a lot of cash flow problems come in. This is where Profit First really flips that equation. It is saying whatever sales you bring in, take your profit first, put it aside, and then what is left is what you can utilize to pay your expenses and run your business. And so if you're going to do one thing, flip that equation.
Yeah, it's easy to become inefficient if you're spending all of your money on your expenses before you pay yourself or before you put aside any profit, right? That's the easy way to do it. This is a little bit harder, but I like to say, do hard things to make life easy, right?
That's it.
It makes you think about where your money's going, and everyone should be thinking about that.
Absolutely.
So with this slide, I want to try and tell you, like, it's just to give you a high level view of how Profit First and Thriday work together. And very simply, this is kind of the account structure. So these dots represent bank accounts. And at the very top, your revenue comes in to a bank account. These two red dots, this money is not yours. You should never even think about touching that money because it doesn't belong to you. It's GST and materials and subs. Materials and subs, for example, if you were a builder, that's, you know, the timber and stuff that you need to buy for the house that you're building and to pay the electrician who's doing the sparky work, right? So that money needs to come out of your revenue before anything else does. Then you put aside your profit, right? And your owners pay. And then after that, you get some money left over for operational expenses and tax. Now, to set this up in Thriday, literally it take you 10 seconds to set up the GST account, 10 seconds to set up that one. So there's probably a minute in setting up these accounts. The operational expense account is what you would have your Visa debit card attached to. So everything you buy for your business, you buy with that Visa debit card, and then you save the receipts to Thriday. We calculate the tax automatically as your revenue comes in and as your expenses go out. And that amount of tax you see, that calculation you should have that amount of money set aside in your tax account, right? So you don't get the bill shock that Mike felt, the bill shock that I've felt before when tax time rolls around or when it's time to pay your BAS. And at a high level, it's really that simple.
That's it. And I love the color coding. So I think we really just need to look at that again. The blue being the stream coming in, the pink or red dots is really money that was never yours. It's needed for other things. It's already allocated. And then the green is what the owner can really spend. So what you can take as a wage, what you can use profit for, and that the yellow is what is left over for that operating expense. So if it feels really complicated, just even looking at the colors can give you a really great guide of what's yours and what isn't to run your business really efficiently.
I'm glad you noticed that, Laura. I did do that on purpose. Red means stop, don't touch it. Green means you can touch it. Yellow means, oh, you might make it through, but you got to think about it.
That's it. I love it.
Okay. The challenge.
Yes. So we really decided that each series, we really want to leave you with a challenge, something for you to take away, implement, take action on. And so we really, really, really would like you to get clear on your goals and how they match the pillars or the 4 keys that we've been through. So ensure that you know your why, that you've had a conversation about your structure and looked at that you've considered what legals might need rejigging or are not in place or are in place but don't really reflect your business, whether or not you're prioritizing your profit, whether that is through your pricing or actual setup of bank accounts that allow you to make really good decisions. And 5th, ensuring that you've got the easiest, most efficient financial management in place. Now, you don't have to do all of these. You can pick one that you think is going to make the biggest difference to being successful in business your way.
Yep.
Beautiful.
So next week, part 3 of the series, we're going to talk about cash flow optimization techniques to maintain momentum and stay ahead of the curve, and give you a weekly checklist, right? That keeps it super, super simple to stay on top of your financials and remain really efficient. So pumped about that.
Amazing. I can't wait for that. And that's where we can really get into the nitty-gritty of things. We do have some questions here though. So let's dive right on in and answer those. So question for you, Justin. Do you have a guide to help transition from Xero to Thriday with the aim to cut Xero off once ready?
Yes, we've got a whole bunch of videos and guides, but in its very simplest form. Because you're starting in the new financial year, you really don't have to do anything. like you open up your Thriday account and literally, if you're using PayPal or Stripe or Square or anything like that, change the bank account attached to those things and hook your Thriday bank account up to them. And just start running all of your income through Thriday, all of your expenses out of Thriday, saving all of your receipts to Thriday. And it literally is that simple. Keep the historical information that you have from Xero, but I wouldn't waste your time on trying to port all of that in. If you start using Thriday halfway through the year, we have a manage balances feature where what I tell people to do is take their total income to date and create a manual balance for their total income, and then get their total expenses to date and create a manual balance for that. That'll bring Thriday sort of net up to date and take you above any tax thresholds that might cause any confusion. But it really is that simple. You don't have to, import a whole bunch of files and go through line items one by one. Just keep it easy.
Awesome. I love that. And we've got another question here. Could you please share about the payroll that is in the roadmap?
Payroll that is in the roadmap. I tell you what, we have a user survey that we're doing at the moment for payroll. I'll flick that out to you guys, and at the end of that, you get the option to say whether you want to talk to one of us. What we'd love to hear is your feedback on what looks good or what you need from payroll, as opposed to me sort of telling you exactly what it's going to look like, because we're in the development phase at the moment. So we're not even 100% sure exactly what we're going to include yet.
Beautiful. And this is the one thing that I want to jump in on. And one of the reasons why Profit First Australia and New Zealand really wanted to partner with Thriday is because they're doing things differently. They're listening to us. They want to know what makes our lives easier, how we can be more efficient, and how we can be successful in business without all of the things that bog us down. So if you really are interested in payroll or anything on that roadmap, give your feedback, tell us, because Thriday listen. And I think that's pretty awesome, because we can't say that about all technology.
Yeah. Yeah, look, we're here to help, and your success is literally our success. That's the only way it works.
Awesome. And Tanya has a question around, does GST get calculated automatically as well? Before you answer that, Justin, I just want to confirm from the Profit First perspective what that looks like, and then you can talk to how that works in Thriday. So the idea being that the GST is 10% of your revenue, and we work in percentages, not dollar figures. And so it doesn't matter what revenue comes in, a percentage should be taken off that. In some businesses, 10% may be too much, and they may, as they implement Profit First, change this percentage. But if you're getting started or you're behind, it should be 10% off your total revenue, and then all of the other money gets calculated that way. And now I'll throw over to you, Justin, around the Thriday aspect of it.
Yeah, Thriday calculates it and recalculates it based on income and expenses. So, and it does it in real time. So as soon as money comes in, the calculation of how much GST you owe for the quarter or the month or the year, whatever is your time frame of paying it, will be calculated there. And if you spend money, we recalculate it. So whatever you see that total amount of is the amount that we recommend having set aside in your GST account at that given point in time. But in the absence of automatically transferring money between your accounts, etc., taking 10% straight off the top of your revenue is certainly a good way to do it, and you'll have more than you need in there by doing it that way at the end of the quarter. So
awesome. And we've got two other questions, and the next one is, how can you take profit before expenses and tax? I love this question, and it's a great question. And what that is that we're talking cash flow versus accounting principles. And what that looks like is the whole point of Profit First. It's been tested in thousands of businesses. And even if you're putting 1% away of all of your revenue towards profit, That is the mindset of prioritizing profit, accumulating that profit in your bank account. And 1% you're not going to notice. You obviously want to increase that over time. The point being that if you put a percentage towards profit, you then know what money you have left over to be able to pay for your expenses and that sort of thing. It's more about the cash flow. And I know that a lot of people think, well, you get taxed on profit, and you do. But if you have your percentages set up correctly, you'll have all of the money in place in these bank accounts to pay your taxes and ensure that you're running a really profitable and streamlined and efficient business. And if you haven't read the book, I really do recommend starting there.
Yep.
Awesome. So we've got a couple of other questions. First is, where do you pay wages from? And I'm assuming that was, so I'm just going back to that because that was in the chat, I think. Wages, to start with, can come from your operating expenses account. So wages are part of your operating expenses account. If you have staff that are more than 20% of your total revenue and are income generating, you may be able to put them into your materials and subs account. But for the ease of just talking about wages as wages, it's generally coming out of your operating expense account. For bigger businesses, we do then take it a step further and say, set up a sub OPEX account that is labeled wages that has its own percentage. So you can absolutely do it that way as well. Beautiful. More questions. All right. We've got, if you need to keep zero because of payroll and just using the bank accounts on the free package, can you still take photos of receipts?
Within Thriday, yeah, you could just use Thriday to take photos of receipts if you wanted to. Yep.
Yeah. Okay, great. And Heather, if you wanted to give us more context around that, feel free to, and we can give you more information. So can you have more than one business running through the Thriday app, Justin? Not
within the same Thriday account. So each business needs to be set up individually within its own account. You know, we might get there one day, but at the moment, you know, we don't have, you're actually the first person I've heard ask that question. So
it's actually a great question.
It is a great question. Yeah.
Yeah, because I found that from a efficiently running a business perspective, it is a matter of ensuring that you have your entities separate. It just means that you can run each really efficiently. And so having it all connected in one probably wouldn't be the most efficient way to run your businesses.
Yeah, it'd be, you know, the big differentiator with Thriday and other accounting platforms is the built-in bank accounts, right? And bank accounts can only belong to one entity, and you can't transfer bank accounts between entities, and there's tax implications for holding money in a bank account that isn't related to that entity, right? So there's all these things that need to be sort of considered, which makes it sort of unfeasible to have multiple businesses running through one Thriday account. And it sort of almost comes back to that whole don't mix your business and personal. Like you could say, don't mix business and business with if you've got multiple businesses, they should each sort of be separate, and having a separate Thriday account for each of them would actually make it much easier to maintain than it would having sort of one account to look at it.
Absolutely. Awesome. My screen's doing some funny things here, so I'm just going to move it back around. So apologies if I froze. Okay, we've got a couple more questions here. How do current accountants and bookkeepers work with Thriday?
Also a great question. So Thriday has all of the reports and documentation that bookkeepers and accountants could need to help you make smart business decisions, to help you do your tax, etc. All of those things are calculated in real time, and you can export them with a couple of clicks. So if you choose to work with accountants and bookkeepers outside of Thriday, it's super easy to do so. We don't have multi-user or sub-user logins to Thriday at this point in time. So your accountant and your bookkeeper can't actually log into your Thriday account, unless of course you gave them the details, which I wouldn't recommend. But giving them access to those reports, and the transaction download actually from each of the accounts is really, really detailed. Within that report, we have the transaction ID, whether it's an expense or an income. We have the GST amount. We have the business use percentage. We have any notes, any tags that you might have used for, if you wanted to market as a particular project or a particular customer. So there's all of this really high level of detail in those exports, which is more than they could ever want to do what they need to do.
Beautiful. And as a bookkeeper and accountant myself, I'd love to answer that question. And the way that I see it is that bookkeepers and accountants could be doing more for clients rather than just the transactional and the compliance side of stuff. Yes, that needs to happen, but Thriday taking care of the efficiencies of that allows for your bookkeeper, BAS agent and accountant to really work on answering some of those questions that we've posed today, looking at business structure and whether or not you're set up, looking at the profitability of your business and what you need to do to take those next steps to grow in a way that suits you. And so I love the fact that Thriday's in the market, giving the opportunity to bookkeepers and accountants to really help their clients in a more meaningful way.
Yeah, and it's interesting you say that, because the bookkeepers and the accountants that get it really get it. They don't want to be doing data entry. They don't want to be charging their clients to do data entry. They want to be charging their clients to help them make smart business decisions, right? So the aim of Thriday is to eliminate the financial admin, and that could be your financial admin, but it could also be the bookkeepers and the accountants' financial admin as well, right? No one should be doing this data entry because it can be automated.
Absolutely. So just another take on that as well. There was a question here, are Profit First professionals going to be transitioning to Thriday? It's up to each business as to what accounting and financial management they use. That said, the Profit First professionals are very much supported by Thriday. So if you are using Thriday, then they can absolutely help you. It really, in the scheme of things, doesn't matter what you use from a Profit First perspective, but Thriday is set up to make it as easy as possible, even if you only use the bank accounts and then transition to the other amazing functionality that Thriday have at a later stage as well. And I think we've got another question here. Can Thriday be used for personal banking?
I love that question, Shane. At the moment, it can't be, but it's something that's kind of in our enhancement backlog, if you like. We've got so much to do with business, but the benefits of Thriday for personal banking is like, huge, and we get it. So
absolutely. All right. I think that we have answered all of the questions. Thank you everyone for being here with us today. And I love how engaged you are in all the questions that you're being asked. Don't forget the challenge that we've set for you this week, which is to look at one of the areas that could really help you to be successful in your business your way, as well as remain or continue to be profitable. And next week, we'll be diving into the nitty-gritty of it all and providing you with a checklist that should help with that.
Awesome. Thanks so much for joining us, everybody. And thanks, Laura.
Beautiful. Thank you.